Hello friends, DK this side. Today in this video, we will talk about insurance. In personal finance, or rather I would say to manage the personal finance in healthy fashion, insurance is probably the first step towards personal finance. Whether we talk about the life insurance product or talk about the health insurance product. But majority of us neglect this very, very important aspect. Especially those who are youngsters, they commit common mistakes, which even I did when I started my career. When I bought the first insurance product, I bought the endowment plan. I considered insurance to be an investment product, while it is not. Majority of us do not pay the attention to insurance as a part of our personal finance. To an extent, it deserves attention. What is the common practice? We rely upon the health insurance product provided by our employer, and we hardly think about the life insurance product, not even find necessary to go for life insurance cover at the young age. While we do buy the insurance for our car, and if we do that, we buy an insurance cover for our car and don't buy insurance cover for our life, what does it indicate? That we consider our life to be less valuable than the car. Am I right in saying so? So let us dig deeper into this very important aspect as to how one should go about it. Friends, do not forget to like the video. Buying a car insurance to a large extent is a very simple process because we don't have any options. And the law of the land forces us to buy the insurance for the car. So there is no option left out to us. So if we buy a car of 15 lakhs rupees, we cover it by way of insurance for 15 lakhs rupees. Or if we buy a car of 20 lakhs rupees, we buy an insurance for the car for 20 lakhs rupees. So what is important is the value of the product that is being considered to purchase an insurance product. But when we buy insurance for ourselves, for our life, we hardly consider the human life value. Like car has a different value points. Different car may range from 5 lakhs rupees to as high as 5 crores of rupees or maybe more. So it's very simple to evaluate the price of the car. But when it comes to human life value, it would vary from person to person depending upon its ability to generate income for himself and the family. So we should always buy a life insurance cover which is meaningful, which can protect our family, because ultimately it is a protection product and life is full of uncertainties. So in order to counter that kind of uncertainties, we need to consider the proper and adequate life insurance cover for us and for our family. At the same time, it should not be expensive. While there are several ways to calculate the human life value, because it is directly linked with the income that we are generating. But a simple thumb rule can be adopted so that we buy an adequate life cover for ourselves and to protect the family. We can follow the simple rule of 20x. What is 20x? For example, our annual income is 15 lakhs rupees. So 15 lakhs multiplied by 20 will calculate to 3 crores of rupees. So this is the life cover we should minimum take. And we can also consider to add the loan that we have taken, and if it is not protected by way of separate insurance cover, say for example, we have taken a loan of 50 lakhs rupees. 20 times of it is 3 CR plus 50 lakhs rupees. So we should buy an insurance cover of 3.5 crores of rupees. If something goes wrong with me, this amount will provide protection to our family. This will help our family to manage for next around 15 years of time before they find a new source of income. and will take care of all those financial planning which we have done for our kids, for their education, for their marriage. Now, I said it should not be expensive. So there are two ways to look into the cost factor of buying an insurance. That is the premium which we pay to buy an insurance product. Number one, we should always choose to buy when we are young and starting our career. Lower the age, we pay the lower premium, and that premium is fixed for a long tenure. Secondly, we should always go for term insurance plan rather than thinking of getting some kind of returns on the premium that we pay. Ultimately, it is a protection product. We buy an umbrella, carry the umbrella in rainy season with the sole aim of protecting ourselves against the rains. So insurance product is to be considered for protecting us from the uncertainties of the life. God forbid, nothing should happen to anybody. But is it in our hand? It is beyond our control. So life insurance product protects our family from uncertainties of life. If we draw the bullet points of today's learning, number one, we should never ever treat insurance product as an investment tool. Number two, we should never delay to buy a term insurance plan with adequate sum assured, if not the 20 times of our annual income, but it should never be below 15 times the annual income plus the loan which we have taken, which is not separately protected through another insurance product. Never buy the insurance for short term. Always buy the term plan for term to 65 so that all our responsibilities are over until such time we are properly covered. Thirdly, we should always pay the premium of the insurance product or a term insurance plan in time to avoid lapsation of the policy. Because once the policy gets lapsed, what happens? We may require to pay higher premium. We have to undergo the medical underwriting, which may push the premium higher, or sometimes if we have developed some disease over the period of time, we may not get the insurance product. Finally, to conclude, insurance product has to be treated as a product to protect the family. In case of some unfortunate events that take place in our life. Friends, give a lot of thumbs up to this video. Share this video. Looking forward to meet you very, very soon.